Right, good afternoon. It is Sunday, the 6th of March, and this is the Stage Analysis Members Weekend video part one. So I'm breaking the members video down into two parts this weekend, just to obviously get it out a little bit earlier in the day on Sunday to obviously give you more of a chance to view it. There's a lot of prep work that goes into the weekend videos. So part one is going to focus on what I'm normally doing in the first parts of the videos is use the forest of the trees approach from Stan Weinstein's method, where we look at the indexes and then the industry groups and the market breadth. So first of all, I want to actually flip that around a little bit, and I want to do a little bit of a group focus on the various industry groups that are moving at the moment, because there's been, with what's been going on with world events, there's been a change of behaviour in a number of groups over the last few weeks since the 24th of February low. So that we had since the day that the obviously Russians invasion began. So we've had some areas of exceptional strength over the last few weeks, and one of those groups is coal. And this has been an area that has been in focus for quite a while. It's been highlighted in the stage analysis watch list continuously for a long time now. And there was, over the last few months, BTU, for example, here has been highlighted a fair few times. So since the start of the year here, you see these grey dotted lines. So it's been, BTU was highlighted 4 times on that, and I actually think it was also highlighted on there on the intraday. We actually talked about it on the intraday pop-up there. But this has had an exceptionally strong week, up 64.58% in a week. So some people I've noticed have been calling this a blow off top, and it could be. There's obviously, but there has been exceptional volume coming into the group. So at the moment, obviously treating this through the lens of stage analysis, we've got a really strong stage 2 breakout on what's the highest volume ever bar here. So if you go back through the time of this stock, it's the highest volume that it's ever had. So it's not that old of a stock, so it's not too many years to compare against. But basically, it's previous stage 2 breakout. If you compare the current move at the moment, where we had this 65% move over the course of a week, you could say the previous stage 2 breakout back in April time, or was it April, May time back there in 2021, you actually had a 2-week bar here where it broke out and it moved 70, we got about 90 odd percent and closed about 75%. So there was a 75% breakout move as such there. So at that point, it attempted to move higher initially during the first part of that follow-on week, but then obviously consolidated for a few weeks. So obviously with such a big move like this, often with stage 2 breakouts on exceptional volume like this, it's the same as when you get an earnings gap or a significant bar where something has had a big move in a short period of time. You tend to get some consolidation or minor pullbacks within the bar. And obviously what you want to see with these kind of bars is for the consolidation to hold in the upper range of the bar, ideally push through a little bit and hold and consolidate in the upper range of the bar. If it does come back in on a backup, so when we have a stage 2 breakout, we have a point which we call the backup range, which is part of the Weinstein method and Wyckoff. So basically you get a pullback. You don't want to see it come back into the previous range. So in terms of the big stage 1 range we had here, obviously the backup came back, and you can see it didn't actually dip back into the range. You do sometimes get a dip back in, but you don't want to start seeing closes back in the range. So if we do get a pullback in here and it comes back down to the 20 level, for example here, so the actual breakout level there was 1983. So say it comes back down to the 20 level, you'd want to see it hold around that 20 level and start to form a range, a higher base in this area up here. So this one could be going sideways for many weeks, or with the strength, the volume strength, it could explode higher. But if we do, as I said, if we do see failure and it starts to come back into the range here, then that would be obviously a cause for concern, and you would obviously the stage 2 breakout failure. With stage 2 breakouts though, in the investor method, stop loss goes underneath the 30-week moving average and the recent swing low, so your stop loss would be a long way away at the moment. So this one would have a lot of room in terms of a longer term hold. Short term, obviously swing traders and position traders, obviously your normal really tight stops around. If it started to fall back into the breakout level, you would immediately be out. Then generally with the Weinstein trader method, you only have a 4 to 6% stop loss on the trader method entry points. So very different to the investor method. So people often get those confused, but obviously trying to hold something for a long time is very, very different than obviously swing trading it over the short term. So in terms of this one, we've got this inverse head and shoulders / cup and handle type pattern on this. It was a 25-week cup and handle, I think we got here. So 25 weeks on that, on the little inverse head and shoulders here. So we've got a higher right shoulder. So when you get an inverse head and shoulders, I like to see a higher right shoulder. And you want to see, with these kind of patterns, you want to see the volume obviously high at the start when you have the initial buying climax area, and then it to dry out and form exactly the same shape as that you're seeing with the actual pattern. So you want to see it a cup type shape with low volume near the bottom of the base in there, and then it's starting to accelerate and the volume picking up as it goes to break out again. So obviously this one's showing good characteristics there. We want to see relative strength versus the S&P 500 at new highs and above a rising zero line. So the zero line is the 52-week moving average here, which is this blue line. So in Stan Weinstein's book, you'll see the Mansfield RS plotted as a flat chart, and you can get that on things like TradingView and various other platforms. But on stock charts, you can't use the flattened version. It only has the relative strength versus the actual index itself and the moving average. But I actually find this one a better version of the Mansfield relative strength, as the moving average itself, which is the zero line, gives you an additional piece of information, as when you get breakouts, early breakouts, like you're starting to get moves back here through the 30-week moving average, and the relative strength is still below a declining zero line. If you get an early breakout, say up in this kind of area, it tends to mean that the breakout's got much more chance of failure. Whereas once it starts to flatten out and the moving average starts to turn up, is when you get your stage 2 breakouts that tend to run. So you can see here the proper stage 2 breakout was back down here, and the moving average was turning up here, the 52-week moving average on the relative strength line. So, and then it did go on from the stage 2 breakout level there. It moved 273% on its previous move up. So as I said, the 65% in the week that it's had it seems a lot, but in terms of, if you look at its previous move, it actually moved almost 300% from its initial stage 2 breakout level, and from the actual close of the week there and then follow through kind of area, it still moved close to 200%. So this one, we want to see some backing up action and tightening up action in here, and for a little bit of VCP, and for a potential continuation. So people say, obviously, how could you have got into this earlier? Then this is the point of the stage analysis watch list. Obviously, you see all these vertical lines in here is where it's been highlighted in the watch list. It's popped up multiple times since the start of the year, and obviously multiple times last year as well. So there's plenty of time to get into this and to see the developing patterns. You can see the sort of cup and handle type pattern was developing here in the low cheap type area, and the lower area, the Minervini 3C breakout here at this point, and then obviously the pullback within the range as it moved to the top. This was actually, it did have a day here where I think they announced a secondary offering and it sold off, but you can see it's had exceptional strength since then. So it's discounted that and moved off to new highs with a massive move. So this one continues to look interesting. Like I said, we want to see consolidation up in this range up here. So one thing that people always want to know is how do you develop targets for these kind of things? Like, obviously, lots of people don't use targets, but one thing that the stage analysis and the Wyckoff methods both have in common is that they do have ways of creating targets. So in terms of a Wyckoff method way of creating targets, there's the horizontal point and figure count where you go back, you create the count line based on the last point of support and the swing low, etc. So we've got a count line here, and you can break it up into individual segments. So you've got a shorter area in here where we had a climax, a local climax, and obviously the initial buying climax and pullback. So we've got a 21 count line across the whole width, which is this lower one, so the whole base. So if we go back to here, that's the whole length across here. That's 21 count on this 0.5 box size with a free reversal. So basically you work it out based on what is you look at the traditional scale first, and then you work out your box size from that. It's pretty straightforward. Like the traditional scale, as it goes through the 20 level, starts to change to a 1 box, and it has 0.5 below that. So the fact that the majority of the base formed below the $20 level, then I gave it a 0.5 box size on the overall. So you can obviously create shorter term targets and a longer term target. So your shorter term target here, this blue line here, the smaller segment, is only 11 columns across. So you count using, it's easy, the quick way to count is to do in 2. So look at the X's. So you go from your last point of support here, you look at your X's. So 2, 4, 6, 8, 10, and 11. So that's your 11 line count. You can quickly count those. Quick say 11 times 0.5 box size, and then times free reversal is 16.5. You then add that onto the last point of support, and you add it onto the low. So that gives you 25.5 up here, which we've already hit on the low side, and 31 on the high side of the short term. So we're getting close to short term targets on this one, which would then, as said, with the theory of that, we're now into a short term target zone, and we've obviously already moved quite a long way in a short amount of time. So that obviously adds weight to the potential theory of we might get some consolidation. We want to see it tighten up. But the longer term base from the entire base size here, the 21 count line here, so it has a 31.5 projection. So you add that onto the 14.5 there, and you add it onto the 9. That gives you 40.5 and 46. So which obviously is from our top line there, is a 100% plus projection from this base here. That's the Wyckoff way of doing it. In terms of the stage analysis way of doing it, you can see we've got a 130% base size here. So you can just use the swing range on it and obviously duplicate that to the upside. So you can either do the straight count way, or you can use the percentage way. I prefer the percentage way. So again, that from the whole base size here, we've got 130%. So you'd be looking for 130% projection on top of the 20. So 20 times 130% is 26. So that again gives us 46. So the fact that both of these different methods are both giving us 46 obviously adds a little bit more weight to that. Again, it doesn't necessarily mean anything, but it can be, it's uncanny sometimes of how good they are, as obviously different people look at different things. So people will set their targets based on different methods. So same as you'll see, obviously, support and resistance at moving averages. There's no reason for them to be support and resistance other than people look at them. So basically, this is the same type of thing. So these targets is projecting on the upside up to 46. And in the short term, we've already hit one of the short term targets, and we're in the short term target range. So at this point in the short term, we project the targets obviously expect consolidation or backing up or a short term top. But the long term obviously shows that we potentially after that we've got potential room to run maybe to the upside if it can follow through. So that's a little lesson for the day on targets using the point and figure horizontal count and the stage analysis, the swing target. Right, let's move on now. So this group as a whole. So one thing that I wanted to have a look at with this, so that's just BTU. So in terms of coal as a whole group had a really strong move over the week. So coal BTU was the strongest in the group this week, but its SCTR score, which is the stage analysis stock charts technical rating score, so it matches up pretty similarly with things like Market Smith and IBD, etc. They have their own kinds of ways of rating relative strength, but This is stock charts way of doing it, and it measures short, medium, and long term. So you can search on stock charts and find how it's calculated, but it does a pretty good job of the medium to long term relative strength scores. So based on that, at the moment, BTU is the strongest in the group, and then we've got METC. So if I move, where am I? No, go back. Just move on to the group here. So if we look at the actual group, we go. So I said BTU is our strongest at the moment here, but METC starting to show relative strength in the near term, but potential on this one that it could be a double top here. Had a little move to the upside there, so at 19.83 and it went to 19.92, so a little bit of a double top there. So if the BTU, for example, is potentially nearing a short-term buying climax, then the likes of this could obviously pull back into the range and might not make a break to the upside yet. We've got obviously other areas in the group that have been exceptionally strong. You can see AMR has been one of the strongest, 99.8 score. Again, another big week for this, and it's been in the stage 2 advance literally since the 2020 low. Arch Coal, again, another big week on this one, been in the stage 2 advance for a long time here. AREC, not so good on this one, but relative strength is picking up, and it's a bit of a smaller name here. Still in stage 1 at the moment here. ARLP, continuation breakout in stage 2. BTU already done. CEIX, we're still in stage 3 at the moment. Potential for a double top if it can't break out here and pull back into the range, but again, a cup type pattern forming on this one. CNX had a breakout move here, so you can see this is, if I quickly annotate this range here, you got your range, which it dipped below, so breaking out to the upside here. So a stage 2 continuation breakout here, or a new stage 2 breakout in this one, but obviously not so much in the way of volume coming into that one. HCC, again, stronger volume, big break to the upside, so still in stage 2. HNRG is in stage 3 here, so you can see the range on this one. Had a sort of change of behavior move in here, and then we've got a higher up thrust that made a higher high there, so it's attempted to move back out the range, but you're going to still have obviously resistance through this kind of area here on that one. So still stage 3 there. And METC we already did, and NRP again stage 2 near the highs, but obviously failed to make a continuation. And SXC stage 2 breakout on this one, big move, 24% on the week, on more than 2 times average weekly volume and relative strength at new highs. So again, this is coming out of a big stage 3 range here. So you've got here, so 50 weeks, so almost a year sideways action and breaking out to new highs. So, but it is running into potential resistance at the $10 level there, which acts similarly to the $100 level. So we could start to, like with BTU, we talked with BTU, we could potentially start to see this consolidating at the top here or pull back in. But if it does, we want to see it ideally hold in the upper half of this bar. But if it does pull back in, we don't want to see it fall back into this range. You want to see it consolidate and base in this $8 to $10 level up here potentially on that one. And then TANH stage 4. So for the most part, it's a very, very strong group. If we look at on the candle glance here, you can see what's going on the dailies. So this has been one of the strongest areas in the market. On terms of the week, it was, if we look at on the weekly, 38.74% on the week. So it's actually our strongest mover on the week this week. So, and if we go on the SCTR score, it's in second place overall at the moment. If we go back to the industry group relative strength table, so there was a number of other groups this week that also had numerous stocks that made stage 2 type moves with more than 2 times their average weekly volume. So I've highlighted these in this light yellow color here. It obviously shows on your screen as that. So aluminium, which has been our strongest group for a while now. So you can see here we've got AA on the 1 week here. We've got CNX and AA both continuing to move strongly. Look at the daily chart on CNX since the start of February here, and then the weekly chart. I've talked about this one weeks ago as it was breaking out, as we had this strong move out of the range here from this stage 3 range, and then the breaking out with the VCP type behavior on this one. We had these, obviously, the contractions you can see on here. So for those, obviously, that like VCP type patterns, you had a 47, then you went down to 28, and then down to 20. So in terms of a weekly VCP, it still wasn't that tight by the end of it, but it did have three contractions in volatility before making a stage 2 breakout, and see the volume has expanded dramatically there. And then obviously since the breakout, it's already had a 60+% move there. So that one continuing to look strong. AA has been the strongest in the group for a while. So you can see hitting that 3 ATR level and running up there. So the bulk of the price action here has been above that 1 ATR level and between the 3 and the 1 for a while. So you see on the weekly, it just continues to run in this massive stage 2 advance. This has potentially been one of the top performing stocks of the last few years. Back on these ones. Go back to the industry groups here. So already talked about coal. Another area of strength was integrated oil and gas and exploration and production. So defense is another one that I wanted to highlight, especially at the moment with what's going on with the world events. We've seen a change of behavior in the group, and you can see over the last 12 weeks, its relative strength score has moved 65. So there's 104 groups basically, and it's moved up 65 in terms of RS rating. So like I said, it's not a 1-for-1 on that, but close enough. So it's moved from the lower half of the table all the way up into the top 10. So it's now in 9th place overall. And if we look at the group itself, defense here, you can see what's going on here. If we go to a summary on this first, do 1 week change. You can see on a 1 week change here, we've had multiple stocks with over 10% moves on the week. So if we look at it on the candle glance chart, you can see this is ordered by in terms of relative strength. This one, ESLT, is a bit of a thin one, had a gap up move and breakout, but you can see I've been highlighting these in the watch list: NOC, LMT, RADA. I'm not sure about if I highlight CW, LHX, General Dynamics. So all of these have been highlighted in the watch list multiple times over the last few weeks, and obviously in the high type flag type moves here, highlighted again on Thursday. So there was a bunch on Thursday here. So NOC here made a continuation from the flag here. Same with LMT, attempting to, but hasn't quite pushed out yet. RADA again hasn't moved out yet, but again, little flag type formation on this one. CW, similar sort of action there, strong move from the 24th of February low here, so it's had a 25% move there. GD also had 15% move, making new highs. LHX, this one's been highlighted multiple times since it started to move out, and again made a continuation move. So this one moved 25% or so. Obviously, with only a small pullback of 7% there before moving on higher. British BAE Systems pulled back quite hard there. This is I think it's a UK stock actually. So this is actually in the over the counter market in the US. And then Huntington Ingalls. So this one is running HII. This one's running strongly above its 3 ATR level, so extended in the short term here. You can see just moving out into stage 2. If we go back to some of these other ones, NOC, look on the weekly chart on these, you can see big stage 2 moves to new highs in that. Lockheed Martin, again, stage 2 to new highs. So they're all moving strongly with massive volume at the moment. If we go back into the groups again, you can see that this, as I said, this has moved up strongly over the last few months, and especially over the last few weeks since that 24th of February low. There's also multiple other areas that have been moving strongly. Gold mining this week is another area which we've talked about numerous times over the last few weeks, and because of obviously gold made a stage 2 breakout attempt again this week and actually completed it. So it did make a stage 2 breakout a few weeks back attempt, and it's kind of squatted through a couple of times, and it finally pushed through this week. So gold has again had a big move, 84. So it was near the low of the table, and now over the last few weeks it's not moved much, but in the last month it's moved up from sort of mid third of the table up into the top 10 again. So multiple gold miners in the watch list again this week, as they've obviously been breaking out into stage 2. So you can see a few of those in here with 1 week moves here. You can see 28% on the HMY, Goro. So is this the gold mine? Is it? Yeah. So multiple stocks in here have been coming up in the watch list: BVN, GFI, AU. So let's just have a look at a few of these quickly. See, some will be coming up in the watch list itself. So we've got some silver miners in here as well. So you can see the stage 2 breakout in HMY, for example. We've got still stage 1 on Goro there. We've got GFI in stage 2 to new highs now. So stage 2 for 3 weeks or so now. That one's come up a few times. BVM moving out into early stage 2. AU again moving out into early stage 2. So obviously all of these, there's lots you can go through in the group. And then same with energy exploration and production has had some exceptionally strong moves over the last week. So you can see 240%, 173, 97% there on some of these. So some of these lower names have just been exploding higher. So have a look at a few of these. You can see this 100% move in INDO, for example. Here we've got AXAS exploding this week in the last few weeks. MXC, another massive move on that one. So lots and lots of stage two moves going on at the moment. So one thing that I wanted to highlight with that is that obviously there's a lot of talk at the moment about close a few of these. Been a lot of talk at the moment about obviously the market being in stage 4, making new lows, but there's actually a very bifurcated market in terms of we've got some exceptional strength in these areas of the market that they've been the top areas since the start of the year, and they've only been getting stronger in some areas. The energy names, especially in the materials names, aluminium, coal, integrated gases here, etc., and now defence and marine transportation and steel, etc. All of these kind of railroads now, gas distribution, food products have started to come in, but they've all been particularly strong since the start of the year, especially in the energy area, as that just continues to run, and the conflict has just exacerbated that even further. So it's whether we get a blow off top in those areas at some point is obviously, it will happen more than likely, but when that happens, obviously no one knows. So imagine world events, you never know what's going on. You could get black swan event, we could suddenly break down in the market, but the weaker end of the market, right, go back. No. If we go down to the relative strength areas down here, so we've got financial administration, tires, real estate, auto parts, etc. All these areas are actually in stage 4, whereas these areas at the top of the chart are in strong stage 2 advances. So that's why the obviously broad indexes are still holding on in stage 3, as we've got a very mixed market with obviously some groups massively in stage 2 and some really strongly in stage 4. So which puts the overall indexes themselves into a stage 3 type environment. So that's why we're seeing that. One other area that I highlighted this week on the members post was I did a group focus on the cybersecurity stocks. So this is a subgroup which obviously doesn't show up in the other industry groups as a whole group. So basically this group has seen some strong relative strength or change of behavior since the 24th of February low. So I'd highlighted this on Thursday. The charts of these have changed a little bit now, but this is the post that I did on the blog for the members. So going through this, obviously ordered by relative strength and highlighting a few of the stocks and marking up their daily and weekly charts there. You can see what's going on those. So you've got the likes of Checkpoint Software, PanW, and FTNT are all some of the strongest in the group, and I think 10B as well. Go back here, yeah. So 10B is the third strongest there. So if we move on to the actual charts of these, you can see the ETFs pull back a bit. Obviously, as individual stocks pull back at the end of the week there. Checkpoint has pulled back a little, but still holding strongly at the 280R level there. We've got, so that's the weekly chart of that. So out into stage 2 on that one. You've got CIBR, which is the largest ETF, I think, of this, that covers the cybersecurity stocks, like pull back into the top of the range here. So this could potentially be an up thrust. You've got a selling climax, an automatic rally, and a secondary test here. And then we've got this change of behavior here with a spring type event in phase B, which then has broken back out to the upside. So potential sign of strength as an up thrust here. So if it does fall back into the range, we want to see it hold in the upper half of the range at least, and not start to fall back into the lower half of the range. But ideally, you want to see it consolidate with this sign of strength here. You want to see it consolidate outside of the range and then make a continuation to the upside. So a little bit of a short-term change of behavior here after this downtrend that it's been in since November, but it's obviously not out of the woods yet. You can see on the weekly chart that it attempted to move back above the 30-week moving average, but squatted on the week and closed back in this short-term range here. So it remains in this head and shoulders stage 3 sort of range here, but it's attempting to reverse that with this sort of failed head and shoulders pattern at the moment. We've had some really strong volume come in the last few weeks here. So as I said, multiple stocks in the group looking interesting. Crowd has pulled back a little bit further than most, but as I talked about on the post on this the other day, this one has got much more overhead resistance. So that's why the focus is on the stocks with better relative strength. So you can see the pullback in FTNT, for example, is nothing like we've seen in the pullback in Crowd here, because obviously it's got much less overhead resistance and didn't pull back quite so far. And same, we go down to, not my hack, let's move on to the second page. Juniper Networks here is another strong area, and we got Net pull back a bit further. Again, this one came off a long way. So, and then Nlock hasn't come back off so far. So Okta, big resistance on this one. It's one of the weakest in the group. And then PanW is actually one of the strongest in the group, and I've got a trade on in this one at the moment with an initial position, so it's a little bit underwater at the moment by a few percent, but at the moment hasn't pulled back into this uptrend range here that it had. So we had an uptrending range, so it's come back in, so it's in the back up at the moment. So I'm looking for it to hold this area and then obviously rebound back out there. Obviously, if it starts to pull back into this area and close below, then be starting to consider exiting at that point, as it would then turn into an up thrust. But at the moment, it's in the back up following a sign of strength. So until it falls back into here, then obviously we're still looking at it from the long perspective. So, and again, the weekly chart of that one. And it's another one. 10B, another area in this group that's looking interesting. Obviously, big change of behavior move here at the top, little up thrust, and has pulled back in. So, want to see this continue to consolidate at the top of the range here before continuing on to the upside there. So, and then ZS, another one of the weak areas of the group. So, that's the cybersecurity stocks. Let's move on now out of the groups and just get back into normal programming let's have a look at the indexes. So starting with the S&P 500 here. So when we're at time-wise, we've got 33 minutes there. So yeah. So starting with the S&P 500, had this spring type action here in phase B of this range. So we've got selling climax, local selling climax into an automatic rally, secondary test, Then more testing in phase B, potentially. Some people have said this might be phase C. Looks a little bit early for my taste, so I feel I've marked this as a spring type action in phase B. Could potentially still be a sign of weakness if it can't follow through, because obviously following a spring, you want to see a change of behavior, you want to see a sign of strength rally to the upside and out of the range. Obviously we haven't done that yet, but we're still in a potential test sort of phase of this. You can see this dotted line here is the 50% of this swing range here, so it's holding up in the upper half of this recent swing since the 24th of February low there. So still normal behavior in an upswing on the short term. So you can see there was a little demand tail on Friday there as well, and it didn't make a lower low. So I'd be looking for this to continue up and out and back through this 21-day moving average. And then we've obviously got near-term resistance to work through up in this 4,500 level and the declining 50-day moving average. So if this is a spring, we're looking for a sign of strength rally up and out of the range. So obviously if it can't make it through these near-term moving averages here and then it starts to falter and roll over, then that potentially turns this into a sign of weakness, and we could be back on the short side on this one again. In terms of the percentage of stocks above their 20-day moving average, so short term, this is still, as it's come out of the lower zone, made a higher low, and it's out. So even though it's pulling back, we're on a short-term positive signal in that regard. Nasdaq, similar sort of price action, but relative strength versus the S&P 500 is near the lows still. So actually made a lower low relative to its spring in phase B here. So it's pulled back in. You can see similar sort of price action we're seeing in the S&P 500. We've still got this major resistance to overcome, which was resistance and support multiple times. So if it can get back through this near-term pivot here at the 13,800 sort of area, then obviously it's got a lot of headwinds to actually get through to pop back out of the range there. So this one, again, spring in phase B potentially at the moment. So looking for this to form a test here and follow and then pull back into the upside. If it continues to decline to the downside, then we've got potential that this could obviously roll over and turn into a major stage 4 decline, but at the moment it's still holding in stage 3. So Russell 2000 has been relatively stronger since the 24th of February low here. It didn't make a spring on the 24th like they did. The major indexes undercut, whereas the Russell didn't. So although this has been relatively weaker, if we look at it on the weekly chart, it's already in stage 4 since this breakdown here, but it hasn't faltered and rolled over yet. So if we go back to, just get the big chart out. It's the marked up chart on this one. So as you can see, we had the failed stage 2 breakout, which is a failed sign of strength rally, which then turned into an upthrust after distribution, fell back in. We made a last point of supply, so LPSY is a last point of supply. So UTAD is an upthrust after distribution. So stage 2 breakout failed. We returned back to stage 3, and then we had a significant break here, back through the 200-day moving average to the downside again. So multiple sort of Wyckoff entry points on the way down here through the base, and then the stage 4 breakdown. And we've been chopping around underneath the stage 4 breakdown level and haven't been able to get back through. So in this one's case, with this local sort of test of the low here and pull back up again. So we're looking for a reversal back through this 205 level near-term pivot. Obviously, we've got multiple moving averages that are still declining here to get back through in this one's case. So small caps still relatively weak versus the large caps, but showing some near-term strength. But I will talk about later on in the video in the market breadth that obviously institutional money flow is not coming into the small caps, whereas it is going into the Nasdaq and the S&P 500. So that is something to be aware of here. The small caps are getting much more love from the small players versus the large players, whereas the S&P 500 and the Nasdaq 100 are getting a lot more volume coming into them from the large players, and the small players have been selling. So it's very much of a divergent behavior going on in those, and obviously the small caps, the retail players are actually targeting those much more versus the large players. So that could end badly in that one potentially for the small players, as the large players tend to win. So QQQJ, so this is the Nasdaq Next Gen 100. So this is your CanSlim type stocks. This is the second 100 stocks in the Nasdaq composite, second largest. So you get a lot of A lot of the CAN-SLIM type stocks in this, the volume on this ETF is pretty good, so runs in the sort of average volume close to, I think, about 500,000 ish, so 500k ish. So basically similar sort of price action we've seen, but again relatively weaker versus the S&P 500. This one is in stage 4. You can see we're in a big stage 4 decline here since breaking down back over here. So still making lower lows in stage 4. So come back to this one again. We'd be looking for this to revert back up and back to the top of the range here, but if it continues to break down here, then we could make a continuation breakdown to the low side. ARK, I wanted to highlight this one again today, as obviously it's been in a stage 4 decline for about 3 or 4 months now, looking to make a continuation breakdown again, so relatively weaker here. If we look at this on the weekly chart, you can see the stage 4 breakdown back here, which I highlighted at the time. You can see just obviously how this is the relative strength, which has continued to make lower lows. And obviously we did have an earlier stage 4 breakdown attempt, which had a sort of local spring here and then came back in, but then it just couldn't get back into that stage 3 range. This significant bar here, it just couldn't even get back into half of the stage 3 range, and then rolled over with the stage 4 breakdown. So that one continuing to move towards the lows here and giving back all of its stage 2 advance from the 2020 advance. So obviously the glamour stocks of the time, but now obviously major laggards in the market, and obviously not an area to be in currently. One more that I wanted to have a look at is the Nasdaq 100. So this is an intraday chart. This is a 4-hour chart. So I haven't posted this one for a while, but this has got the Ichimoku cloud on it, which is basically a visual way of looking at support and resistance levels. So obviously it considers time as well. So you can see from this one, the near-term range, we're actually starting to get to a thinner area of resistance again. So the thicker area that we faltered at initially, we're now starting to thin out a bit. So the time-based element of it is wearing down the resistance. So we could potentially, if we start to see a break through this kind of area here, then we could start to see a move back into a positive environment again. But you can see at the moment, when we're below the red cloud here, we're on a short-term downtrend. So we're still in a downtrend. So until we start getting to the upper side of here, then we remain in a downtrend. But generally, when you're in above the cloud, you're in a more positive environment. So, but when price action is below the cloud, it's a more negative environment. So just always aware of that, and it can be a good way of looking at for support and resistance on a weekly chart. You can quickly just dump the cloud on the weekly chart, and you can see whether you're in a positive or a negative type environment. You know, as obviously part of the method is to have no near-term resistance. So obviously at the moment we've got near-term resistance. So until we move back into a more positive environment, even that means going sideways for a couple of weeks here and then breaking back into this area here, then at that point the resistance will have waned a little bit. And then finally, on the indexes, the VIX still remains elevated. So as I've talked about multiple times, we want to see it below this 200-day moving average here. So at the moment, we're well above the 200-day moving average near the highs. So it continues to be a difficult trading environment because of that. Right, moving on. Let's look at the market breadth charts to finish up this part of the video. So this is my major sort of market timing tool that I use in the stage analysis method. So a big part of the stage analysis method is what we call the weight of evidence approach, where we look at obviously numerous market breadth indicators, as well as what's going on in individual stocks, the leading stocks, and the broad market in general. So we look at multiple different areas, and we come up with the weight of evidence of whether the environment is positive or negative or neutral, and obviously strategy wise how you should be positioned. This chart is the combined US total percentage of stocks above their 50-day, 150-day, and 200-day moving averages combined. So this is made up of 6 individual charts, and obviously combined to make this really, really useful breadth tool. So field position, it goes from 0 to 100%, and basically when you're below the 50-day moving average here of it, which is this red line, you're on a difficult environment, and when you're above it, you're in a positive environment. And obviously based on your field position is what stage of the market you're in and the kind of risk that you've got. So lower end of the market down here, risk is high when you're in the upper part, and risk is lower when you're coming out of the lower part. So it's a bit of a misnomer on that one at times. As obviously you can have your greatest speculation points as you're breaking out into the upper area, but then you can have your greatest areas of risk as you're breaking down from the upper zone, whereas you can have your greatest areas of downside speculation as you're moving into the lower zone. And then once you start to move back out of the lower zone is once you start to get like you're in your lowest risk areas. So it's a bit of a difficult one to navigate in that regard. So when you're just moving down into the lower zone for the first time and you're still on a difficult environment signal, then obviously it's still very high risk that it's obviously the market could be in stage 4 at this point here, late 2018, and this point here, obviously February, March, April time in 2020, we were in major stage 4 declines. At the moment, the market is not in a stage 4 decline. It's in stage 3 overall, but multiple individual stocks are in stage 4 declines. So as I said, it's a very bifurcated market at the moment, which has been holding this level up. So we've not had that kind of flush that we've seen back there. So late 2018 here, we did have a flush at the end of the move after consolidating for a while in the lower zone. So there is obviously that risk that we might have a flush event, which would obviously then clear out the market, and we would potentially then could have a massive stage 2 advance type move. But at the moment, we're looking for a near-term break back into a positive environment. So we want to see this get back into a positive environment. It's currently at 28-ish% there. Basically want to see it get back through the 50 bar moving average here and basically move on out. So there's a 36% level here. So if we move on to the point and figure chart of this, we can see this much more clearly. So using the bullish percent index statuses on this remains, we're in what we call a bear correction at the moment on this one. Actually on a bull alert, sorry. We're on bull alert as we had a reversal from the lower zone back through the 30% level here. So we're on bull alert, and if we break above the 36% level here and make a double top breakout, then that would move back to bull confirmed. So at the moment this remains on bull alert status. So back to our line chart here, that's this level here. So if we can get a move back through this level here, then we would move back to bull confirmed. But at the moment, we're still on difficult environment status overall because we're below the 50% level. So we're on a difficult environment, but we're on a bull alert. So just keep that in mind in terms of strategy. What that means is that you're obviously defensive on the long side. You tend to be more heavily in cash. There's obviously you take advantage on the short side, if anything, on pullbacks to moving averages, because basically the trend is down, and obviously it's very much a focus on risk environment with progressive exposure only on the long side. So not getting heavily invested until things start to work. So at the moment, obviously, for me personally, that means I'm very lightly invested on the long side on the short-term accounts, as obviously that is the strategy for me. So defense on the long side, higher cash levels, and then obviously waiting for that positive environment to develop. And then once that does, obviously starting to move aggressively back again as things with progressive exposure, as things start to work again. So we look at the Nasdaq version of this, it's much weaker. We look at the NYSE by comparison, you can see it's around 36% level, whereas the Nasdaq is down in the 20% level. We have pushed above the 50-day moving average a few times, so we've got a lower bar to get above here, so around the 28% level on the Nasdaq to turn back to a positive environment there. But again, it's still been the lower zone at that point, so we want to see it get back through that 30% level and out. Whereas the NYSE has got a higher bar here, we'd actually need to move back through around 46% there to turn back into a positive on that one. So at the moment, but you can see the NYSE has been holding up much more strongly because we've got multiple groups, as we talked about at the start of the video, your coal, your oils and your materials, etc., all in stage 2 at the moment. So they've been obviously keeping this a much higher level, while the Nasdaq has got the majority of the weaker groups in stage 4. So it's obviously got down to a much lower level. So in terms of investor methods, we are obviously in a potential area where you should be looking for groups and stocks that are making stage 1 bases, as these we could potentially turn into obviously stage 2 advances at some point in the near future. So if obviously we don't turn into a major stage 4 decline at this point. So just keep that in mind and start looking on the long side in the for base structures that are forming, and then obviously start to track those in your watch lists. What we got now? Short term percentage of stocks above their 20-day moving average. So the Nasdaq actually did weaken, fell back into the lower zone on Friday here, closed at 28.9%. So this one's actually gone back to, it was on a positive signal for a short bit there, but moving back below the 30% level here, it's moving back to a negative again at the moment on that. Nasdaq 100 low, still on a positive signal there. Still on a positive signal, even though it's pulling back in the NYSE here, but it's still, we come out of the lower zone after making a higher low here. So although it's pulling back, it's still in a good range. 41.27% of stocks in NYSE above their 20-day moving average. Small caps, you got 42% above their 20-day moving average and still making higher lows at the moment. And then the S&P 500, again, around 44% above their 20-day moving average. So after obviously making a higher low and pulling out. So the majority of the short-term moving average charts there are on a positive signal, where it's the Nasdaq, the only one that's turned back to negative again. The other short-term measure I use is the Nasdaq and the NYSE bullish percent index 1 hour time frame here. So this uses daily signals, but it's a 1 hour chart. So when it's above this 30-bar moving average, this blue line here, you're on and it's turned, and the bar is, and the moving average is turned up, then it's a positive environment. So during the 31st to the 10th here, we were on a positive environment, for example. And then obviously when it's below declining 30-bar moving average, so from like the 15th of February here down to the 24th, 28th kind of area, that was on a difficult environment there. Then we started to move back into a positive environment. We just dipped below the moving average on Friday here. So in the Nasdaq and the NYSE, just around the moving average. So both the moving averages are still climbing higher. So put this in a neutral status at the moment on the short term. So we need to see this recover back above to move back to a positive environment. Obviously, if it starts to dip below and the moving average turns down, then the short term will turn to negative/difficult again. If we look at the longer term charts on the bullish percent, so this is the NYSE bullish percent index. So you can see here we're still on a bear confirmed status on the long term at the moment, and in a column of O's. So this one is on defense. So when you're in a column of O's, you're on defense, and when you're in a column of X's, you're on offense. So you're on defense, and we're still in bear confirmed on the NYSE versus the Nasdaq. Look at the Nasdaq one here. Again, also still remains on bear confirmed down in the lower area here. We haven't yet moved back to a bull alert in this one. So this one, 34% at the moment in the Nasdaq bullish percent index overall, still on the bear confirmed since breaking down in February last year. So this one remains negative on the longer term point of view. Advanced decline line. So this is the NYSE advanced decline line. You see, remains in stage 4 in the NYSE. If we look at the Nasdaq, again, worse in stage 4 at the moment. So it continues to make new lows there. The cumulative advanced decline line low has moved to negative recently. It's been on a difficult environment since mid-January there. Had a little peak back above, but reversed back down again. So this one remains on a negative signal at the moment. If it can reverse back through this 50-day moving average here on this is the cumulative advanced decline volume line. So if we can get back above that, then could potentially turn back to a positive environment again. You can see for the vast majority of the last few years, the Nasdaq has been in a positive signal on the cumulative advanced volume line at least. And then the momentum indexes on this. So this is the 10-day momentum index at the top and the 200-day momentum index at the bottom. So the 200-day was what Stan Weinstein called the momentum index. So you can see it's below its zero line at the moment in the NYSE here. The short-term 10-day here is making higher lows still. So we need to see this get back above the zero line, but it remains in the lower zone. So it still remains in the negative half of the chart, whereas the Nasdaq, similar sort of behavior, a little bit weaker even still. So well below its zero line that's been below since September time there. So, and near the lows. So short term, it's attempting to make higher lows here, but it hasn't yet got back through the zero line convincingly. So we need to start seeing it holding up in the upper half here for a more positive environment and momentum index to break some near-term levels here on the downside. I won't bother with the McClellans at the moment. So new high, new lows. So this is MOSC. So new lows still outpacing new highs at the moment, 275 to 137 new highs on the MOSC there. Got the Nasdaq 539 new lows on Friday versus 64 new highs. So again, still outpacing, but you can see there has been some downtick in the amount of new lows. So they have been getting less. But our overall cumulative line remains on a negative signal since early December here, and continues to make new lows. So we look at the 5-day average of this, again, still remains in a sort of messy area. Again, as I talked about, we're getting higher lows here, but we need to start to see this back above the zero line and ideally back through that $1,000 level plus in order to be back into a sort of more bullish environment. At the moment, we remain on a negative signal on this one as well. A custom chart that I do each week is the cumulative point of figure breakouts minus breakdown. So this covers the entire US market. And as you can see, again, stage 4 on this one at the moment still. So we need to start seeing this get back through these near-term 20 and 50-day moving averages to turn back to a more positive signal, positive environment at the moment. Stage 4 and on difficult environment status. Cumulative, this is the greater than the 1 ATR level. So on the chart. So if I quickly zoom back through, there's a 1 ATR level on this. Find it for you. Yeah, so the 1 ATR level is this dotted gold line here on the S&P 500 chart, for example. So the middle line is the 21-day moving average, and this dotted line above it is the +1, and the dotted gold line below is the -1 level. So this custom chart looks at this is the +1 ATR level. So we've got at the moment in the S&P 1500, so you've got just over 20% there at the moment that are in short-term uptrends versus around just over 30% that are in short-term downtrends in the S&P 1500. So outpacing downtrends, outpacing uptrends at the moment still. And as you can see from this cumulative line, this is obviously still trending to the downside here and below its own 20-day moving average there. So that one is still on a negative. And then to finish off this part of the video, we've got the effective volume charts, which you can find on effectivevolume.com. So really good site that separates out the large player volume from the small player volume. So obviously reading this it can be difficult at times, as obviously people could be using these for hedging purposes and etc. But as a general rule of thumb, we're looking for, especially in bases, we want to see the large players obviously showing signs of accumulation, and we want to see the small players either doing the opposite or participating. So, for example, at the moment, the S&P 500 here, the green line here is the large players. So since the 24th of February low, we had a surge in large player volume, and then it's generally gone sideways. So you can see we're still well above the 24th of February low here in the large players, whereas the small players have been less convinced and are actually near the same levels we saw at the 24th of February here. Whereas in the double long S&P 500, again, large players have been accumulating, small players have been going sideways. And then in the ultra short, small players have actually been getting short, whereas the large players have been going sideways. So disparity there in the S&P 500 in terms of large players and small players, obviously doing completely different things. But the large players seem to have more confidence than the small players. Whereas the Nasdaq 100, again, since the 24th of February low here, we've had some accumulation in the Nasdaq 100, whereas we actually made a lower low in the small players. So we're actually seeing a divergent behavior there between the large and the small players. So, and again, in the ultra long, the Nasdaq, the large players got strongly back into the ultra long here, whereas the small players have been continuing to sell. So basically, and then the ultra short here, again, large players have been selling out of this one. So they've actually not been getting short. They've actually been getting rid of their shorts, whereas the small players have actually made a higher high here. Actually, the small players have been getting short. So again, S&P 500 and the Nasdaq is telling the same story in terms of large players are longer than they were on the 24th of February, whereas the small players are shorter than they were on the 24th of February. The Russell 2000, on the other hand, is a different story. This shows large players have not been very interested since the 24th of February low here, actually gone sideways to slightly lower, whereas the small players are slightly higher at the moment. The ultra long small players have been going sideways to slightly lower. Large players have been going slightly lower. So large players and small players both not overly interested in the Russell 2000 at the moment. And on the ultra short, the large players have actually been shorting it versus the small players haven't been shorting it. So different story in the Russell 2000 to what we're seeing in the S&P 500 and the Nasdaq relative volume there. So they've shown that obviously my interpretation of that is that the large players are more interested in the high quality areas of the market at the moment, and the small players are obviously doing the complete opposite. So obviously what you want to see for a sustained rally to move, we need to see both going in the same direction. So we need to see the small players turn around on the short side there and start to get back involved again, and then we could potentially get a rally back out of the ranges again. But until that happens, obviously it's the large players are holding it up in the base. Okay, back to the start again. So an hour long there. So I hope that was helpful for you. So for anyone watching this on YouTube, this is the kind of video that I do each week for the Stage Analysis members. I do a bunch of these a week. So one during the midweek on a Wednesday, and then one or two on a Sunday or a Saturday and a Sunday over the weekend, where we look at the industry groups, obviously the indexes, the market breadth action, and also go through the Stage Analysis watch list and what I'm looking at and why stocks are in the watch list and what I want to see from them in the coming days / weeks. Obviously from them, as obviously the watch list is not a buy list. It's just we're starting to see things developing structures. So for example, on BTU here, where I was highlighting stuff in the watch list, it's not a suggestion to buy at that point. It's a suggestion just to set alerts and start to see what's going on. So at this point here, when I first highlighted it at the start of the year, it had a strong move and was starting to make a little shallow cup type action here. So we then had obviously a pullback. It made a little bit of local spring type action here and a higher low. Then obviously highlighted it again at this point as it started to look like it was potentially going to move back out again. So at this point, we'd had two highlights in the watch list. So at that point, you obviously would have set alerts at the top of the range here, or maybe even an alert at a lower level down here, and then potential to get into it as it starts to move out of the base structure here. So, or as it starts to move out with this sort of local sign of strength and into the backup. So that's one of the ways you can use the watch list. So anyone that wants to obviously join Stage Analysis, then come into the site, go to stageanalysis.net. Where are we? There we go, back one. And then these are the obviously kind of posts that we get. So once you're logged in as a member, you come into the members dashboard here. You've got an area to manage your subscription. You obviously got different posts that I do that get posted. So we have watch list posts, and we have the relative strength group posts. We have videos. So the members videos, for example, midweek video back here. So obviously talked about Pan W trade, and obviously went through cybersecurity group stocks, short-term market breadth. We talked about silver, uranium group, obviously short-term change of behavior in that, and obviously the watch list. and then obviously the various watchlist stocks. So obviously go to stage analysis and basically go to log in or subscribe and create an account and then log in and basically join up, and you'll get to see all of these kind of things each week and obviously help you learn the stage analysis and the Wyckoff methods. So obviously thanks for watching, and I hope to see you in the members forum. So I'll see you later.